probably want you to cover the cost of those 20-somethings using all that data every month. But most people 50 and up like me only use 12 gigs or less. Don't get bamboozled by big wireless. Switch to Consumer Cellular. Our plans start at just $20, and we use the same towers as the big guys. Join the millions who choose something better, because if you're not using all that data, you're probably getting used.
Call 1-888-FREEDOM, visit consumercellular.com/fax or a store near you. Plans include $5 credit for auto pay and e-billing. See site for additional facts.
Hey, I'm Mike Slater. My dad passed away at the age of 63. It's out of nowhere. Had a stroke. Super hard, obviously, for the whole family, but my dad had life insurance. This is why I have life insurance for my family, for my wife and 4 kids. And the best place to get life insurance is ethos.com, because you can do it in 10 minutes. And there's no medical exam and no blood test, just a few health questions. Get life insurance in 10 minutes so your family is protected. Ethos, E-T-H-O-S, ethos.com/Mike.
Hey parents, you don't need the latest gizmo, slang, or clothes to be a perfect parent, because kids in foster care don't need perfection. They need you. For more information on how you can adopt, go to adoptuskids.org. A public service announcement from the U.S. Department of Health and Human Services, Adopt Us Kids, and the Ad Council.
You're tuned in to Money Matters Boston, 1120 AM WBNW. This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM. Concord, Boston, the Money Matters Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Mark Vonner is the CEO of Veterans Development Corporation. Mark is a career military man, having served for nearly 20 years, and we are so thrilled to have him and his company as a key partner and the presenting sponsor of the DAV 5K Boston. Mark comes from a proud military family, including his father Victor and his brother Timmy. Mark talks often about how serving his country was one of the greatest achievements of his life, and that's one of the key reasons that he chooses to give back to this special community. Mark is honored to continue his legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Mark, and it's why he's taken the time to fully support the DAV Department of Massachusetts. You can join Mark Vonner and Veterans Development Corporation and help our great American heroes today by making a donation or becoming a sponsor. Simply visit dav5k.boston. That's dav5k.boston.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Inflation and Your Retirement Plan. Mike, why is it so important for retirees to account for inflation in their planning?
Yeah, massively important, and I think any retiree over any course of history will tell you that. And when you experience inflation, when you're on a fixed income, it's tremendously difficult. But even small changes in the rate of inflation, or seemingly small ones, can really lead to massive changes. For example, if you're facing 2% inflation, that means that prices roughly double every 35 years. If you're looking at 4% inflation instead, those same prices double only in 17 years. A huge change to your budget.
And obviously, this also then influences your overall spending habits and your withdrawal rate over time. These are things that you have to account for in your planning. You can't just assume that you're going to necessarily see the same kind of inflation that you've seen previously in retirement.
Yeah, look, I think generally speaking, over the course of the last 20 years, while there have been massive drawdowns in equities, the inflation figure has remained relatively stable. If you're worried about something that could look different from that over the course of the next 20 years, then it's important to really consider what that would mean for you.
Our guide this month is titled Inflation and Your Retirement Plan, and there are two ways you can request it. The first is by calling 800-393-4001, or you can request it online at armstrongadvisory.com. That phone number again is 800-393-4001, or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Michael Valila, adjutant of the Disabled American Veterans Department of Massachusetts. We pride ourselves on being able to support veterans in their time of greatest need, ensuring they receive the protections they deserve. For over 100 years, the DAV of Massachusetts has helped thousands of veterans with housing, transportation, and medical assistance, and you can help too. Please visit dav5k.boston and make a donation today. That's dav5k.boston.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Paul Lane.
Good morning. Happy Monday. Welcome back to the Financial Exchange. It's Mike, Paul, and Tucker with you on a busy start to a week, Paul. We've got a lot of data that is due to come out. We've got a looming government shutdown that we will be covering. Nobody seems terribly concerned about that one, quite honestly. We have a bunch of data about jobs coming out this week. Tomorrow, Willie will have a job openings survey. On Friday, we get the monthly jobs report. On Thursday, we get the weekly jobless claims. A little bit of home sales data as well. And then finally, we will also have a few earnings coming out. At 11 a.m. today, we're going to be discussing another story in... Quite honestly, it's a story that's getting overlooked by most major news publications that I think could end up being one of the biggest stories of the year when it comes to debt markets and another blow up in the auto industry. But we'll be covering that at 11. But I want to start off with the week ahead and just kind of where to focus, because there is a lot coming out this week. Just cover that schedule again. Pending home sales just came out 7 minutes ago. We'll cover that. Another home data point tomorrow at 9 a.m. is the S&P Case-Shiller Home Price Index. We have not seen a dramatic drop in home prices nationally, but market by market, it's been a little bit interesting. At 10 a.m. tomorrow, the job openings report. We do expect to see that one. Consumer confidence is also out at 10 a.m. And then at midnight tomorrow is when the government shutdown could go into place here. So anything beyond that, a little bit of a question mark in terms of whether we will get it. ADP employment, that's done by a private payroll provider. We'll get that data. ISM manufacturing, same story, by a private organization. But other pieces around, the jobless claims out on Thursday, as well as, I don't know if puts together the factory orders. I'm guessing that's a private industry as well. And then the Friday jobs report is done by the Bureau of Labor Statistics, which will almost certainly be shut down in the event of a government shutdown. So I wouldn't expect to get that if we do have this shutdown. But what are you looking at, Paul, that could move the narrative here for the state of the economy, assuming we get all these releases?
To me, it would be the jobs report. Obviously, the Federal Reserve has indicated that the labor market is their biggest concern at the moment. That's why we saw the most recent rate cut, and there could perhaps be 2 more over the course of the end of the year. So whatever data that we can gather from Thursday and Friday's reports is really what is going to be most significant. We had the initial jobless claims for last week come in lower than anticipated, so that was
lower meaning better.
Better than anticipated, so that was certainly a positive note. Yeah, exactly. Birdieing there. But the week prior to that, earlier in the month, was rather abysmal, but week to week these numbers can get kind of noisy on that front. Of course, Friday's report is probably the most significant of all this week, where we're anticipating that we would see a 50,000 increase to non-farm payrolls after a 22,000 gain in August. For the last 4 months, we're averaging about 26,000 jobs added. This is much less than where we were over the course of the last several years, where 150,000 was kind of more the number. So really, that is the biggest focus for me this week. Some of this other stuff is noise that we'll definitely follow and keep an eye on, but the labor market is really of utmost importance, and any data point that could perhaps push it one way or another is what markets will be most focused on.
Yeah, I think there's the other piece too. The unemployment rate that comes out on Friday is of key focus, and I know that's all included in the same report, but that unemployment rate is the one that the Fed has pointed out over and over to say this is more what we care about when we're trying to measure the tightness or slack in the labor market. It has slowly crept up from about 4.1 to 4.3 over the last 12 months, but honestly, that's not a big move. And I think that's the main item that's kind of holding more Fed governors back from buying into a full and full-throated support of more rate cuts down the road. And so should you see that unemployment rate go down, which, again, how could that happen when we're seeing such weak job hiring numbers? Deportations and retirees, right? Like those are the 2 main factors that I'm looking at that could lower the unemployment rate. Would be more people leaving the workforce because of deportations, more people retiring because baby boomers are getting older now. Weigh that against a very weak hiring market right now. Employers that are just not pulling the trigger on the new rules, whether it's because of AI, uncertainty about tariffs or some other factor. They are just not hiring at the pace that they were for the last several years. And there you land the Fed in a particularly difficult conundrum right now. We think we're a little bit too aggressive in terms of our rates right now. We don't know how much lower they need to go, and that jobs report, I think, is going to be key to determining which direction that goes in.
Yeah, and I think it segues us into kind of that discussion that the rate cuts, perhaps they're not enough to cure the job market. I mean, we have to see what the job market looks like, as you were just mentioning there, and we were talking about what we'll see from Friday's report. But what we've seen is, like I mentioned, a 0.25% cut that occurred earlier this month, and perhaps 2 more. But typically when you're lowering interest rates, what that provides to the economy is a boost to asset prices. So all of a sudden, borrowing costs are less, or potentially risk-free rates of return are less than they once were. So that would boost asset prices. But at the same point in time, it doesn't necessarily trigger a expansion of hiring or anything of that nature. It's good for people looking to buy a house, potentially. There's some trickle-down effect on the interest rate side of things, and for borrowings, but not necessarily an immediate impact to hiring.
To be clear, if the labor market needs rescuing, needs saving, the Fed lowering rates has no ability to do that. Right? Like the reason they're cutting rates is not because they think the labor market needs rescuing. They're doing it because they think they're maybe getting in the way a little bit. They think that their policy is a little bit restrictive for businesses, and so they're saying, hey, we just need to normalize things so that we stay out of the way of the economy and of businesses trying to move forward with their plans. That is the only thing that the Fed is acknowledging here. But yeah, I mean, to your point, if the labor market ends up in a free fall where unemployment is rising and rising quickly, the Fed really has no real ability to rescue that on their own. They rely on Congress to come up with different things, or they just allow for the business cycle to go through what it needs to go through.
Right.
And the best they can do is get out of the way.
Right. They only have so many tools at their disposal. This is one of them to try and stir up more economic activity, or like you said, maybe get out of the way. But it's not a cure-all necessarily.
Right.
And that's why we want to focus on the jobs report and the labor market, because it's significant to the overall well-being of the economy, and that's what the Fed focuses on too, and tries to do its best to keep it afloat. But it doesn't have every tool at its disposal to cure all the ills.
Let's take a quick break here. When we come back, I want to move on from the Fed and the job market and just talk about this economy and its possibility of recession. It seems pretty far off. I know that seems ludicrous to talk about when we're sitting at 4.3% unemployment, and the most recent reading on GDP was 3.8%. But a few pieces about recession and what seems to be holding it back at this stage. That's next on the Financial Exchange.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
Inflation, housing costs, and rising interest rates are putting pressure on families everywhere. From higher insurance and taxes to volatile markets, today's economic landscape is changing fast. This is Chuck Zada from the Armstrong Advisory Group. We're hosting 2 financial seminars this fall, first at Margaritaville Resort Cape Cod on October 9th, and next at the Showcase Superlux in Chestnut Hill on October 16th. Call 800-393-4001 to reserve your spot. We'll discuss how to manage risk, protect your retirement, and create a plan that can handle economic ups and downs. Whether it's core inflation, market volatility, or policy changes, you'll learn about strategies that may help you plan smarter. Register today by calling 800-393-4001 or on our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Every dollar you've saved in retirement accounts and life insurance tells a story of hard work, smart choices, and the future you envision for your family. One way to help that story end well is to make a beneficiary choice that does more. This month's free guide from Cushing & Dolan, IRA and life insurance planning, estate tax strategies, and nursing home protection explains how naming your estate as the beneficiary of your IRA or life insurance can add a layer of tax efficiency and nursing home protection while still allowing your spouse access when it matters. It's about keeping more of what you've built working for your loved ones now and in the years to come. Get your free copy today by calling 866-848-5699. That's 866-848-5699. Or you can request it online from our website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. This fall, why just watch the leaves change when you could watch the sunset over turquoise waters? The U.S. Virgin Islands are your perfect fall escape. Set sail on the sparkling blue sea, snorkel colorful reefs, kayak through calm lagoons, or try to reel in the big one with world-class sport fishing. Then, explore Charlotte-Amalie, the capital of St. Thomas, with its historic streets and duty-free shopping. Ferry to St. John's Virgin Islands National Park for hiking and secluded beaches. And finally, experience the culture, festivals, and rum of St. Croix. 3 incredible islands, countless experiences, and something for everyone to enjoy. With easy travel from New England, no passport required for U.S. citizens, and no money to exchange, paradise is closer than you think. So why wait? This can be the season you fall naturally in rhythm with the heartbeat of the islands in America's Caribbean. The U.S. Virgin Islands. Plan your getaway now at visitusvi.com. That's visitusvi.com.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
The latest news on inflation, the Fed, the economy, and how the markets are reacting every morning, right here on the Financial Exchange Radio Network.
This year's DAV 5K is sold out, but you can still help our great American heroes. The race is Saturday, November 8th at Castle Island, and you can visit dav5k.boston to make a donation of any amount to support our troops. Your gifts help fund free rides to medical appointments for veterans and the nation's first DAV-led housing initiative, providing homes for single veterans and veteran families. Go to dav5k.boston and make your donation today.
So, Paul, two different pieces about the economy and where it stands. And the conclusion of both of them seems to be that, yeah, recession is seeming pretty far off, but a lot of the potential reason for that is the spending among the wealthy. And then drawing that further down, the spending from the wealthy seems to be coming from I don't want to say inflated, but compared to a few years ago, inflated self-assessment of their overall net worth. And that's coming from a number of different areas: stocks, real estate, crypto, just to name a few of them. But this is the trend that has been playing out, right? We have a large swath of Americans who are struggling to make ends meet. You are seeing that through all sorts of survey data from credit card issuers, from auto loan issuers. Tricolor, a relatively unknown company that mainly issued car loans to subprime borrowers, went bankrupt just a couple weeks ago. You're seeing cracks in the foundations for that demo. The other story is that the top 10% of income earners now account for half of total consumer spending. And yeah, subprime auto loan, doesn't seem to matter to them whatsoever. They keep on spending, going on vacation, and driving this economy forward. So I guess the question is that uniquely different than other times in history? And is it something to actually be concerned about? Is the very difficult question to answer.
Yeah, that statistic, obviously, we've talked about it a lot. Half of the consumer spending, consolidated between that top 10% of income earners, but it's always been relatively high. Like if you look back over the last decade, so it's been 40% and it's grown. But to your point, perhaps is it different? It's more than it was before. I do just have this underlying suspicion, and I wish that there could perhaps be more data on this. It's just, it does feel like because you're accounting for so much spending from those people who are likely pretty heavily invested in the stock market and have a lot of investment savings, that because the market has fared so well over the last few years, that does have them in such a good place from a financial perspective when they're studying their portfolio growth, that it allows for, whether it be retirees or some of those higher income earners, to spend more frequently. And I do think that back in April, when the market did see a very abrupt correction, that there was stories that we covered, Mike, about leisure travel and some of these other spending areas that were showing weakening demand. But because we saw a pretty quick correction on that market downturn, it resumed, and there was continued evidence that April through June was a good period for spending. So in terms of the recession in the future, it just doesn't really, it seems like a lot would need to go wrong in a short period of time to trigger that. I mean, you could certainly make the argument for maybe some malaise where we just don't really see a ton of economic growth, but it's harder to foresee that occurring, at least in the nearer term here. Inflation looms a risk out there, and so does the labor market, but it's incredible how resilient the consumer has been for what's it been, the last 4 or 5 years.
So I'm going to quote Mark Zandi, who's the chief economist at Moody's Analytics. I do think that goes to the bounce in the stock market and the wealth effect. I think all of the spending is coming from well-to-do, high-income, high-net-worth households that are seeing their stock portfolios are up, and they're feeling a lot better off, and they're spending. The article goes on, but they're then quoted as saying, let me see, the economy is very vulnerable if the stock market does turn south for whatever reason. So I guess the question to me is it more elevated than it normally is? Is that risk more elevated than it normally is, or is Andy just calling out a fact that is always true? Wealthy own stocks, wealthy contribute a lot more to the economy than low-income earners, and so therefore it's a more appreciable reason. The other question I have is, do you need just the stock market to fall? Or, do you also need real estate values? Do you need crypto markets to fall too? These have been, crypto is not, nearly the size of the stock market in terms of its concentration or spending power. But, those are all intertwined as well when it comes to this wealth effect that we are seeing. And so I remain unconvinced that just a drop in those areas put us more at risk than normal. What I do think perhaps puts us more at risk than normal, though, is the fact that we are, and we've mentioned this before, in the 98th percentile ever of how pricey the stock market is right now.
Mm-hmm.
That doesn't necessarily make it more susceptible to an imminent downturn. It does perhaps make it more susceptible to a larger downturn.
Sure.
In the event of some big disruption that, let's be honest, nobody ever is able to predict ahead of time. You only see in the rearview mirror. Does being in the 98th percentile make you more susceptible and therefore contribute to a bigger pullback in spending and all these other tag-along factors? Possibly. I guess that's where I'll put it, is I'm not really sure I buy that this situation is terribly unique.
That's fair. I think that one of the things I was just thinking about from an example perspective, 2022 was a very bad year for stocks where the market was down 18%. And the overwhelming story there wouldn't be a significant decline in consumer spending because of market-related factors. It was the inflationary pressure that you'd see pullbacks from. But the sentiment around that time wasn't, oh, geez, the market's really getting beat up, we're slowing down our spending. It was more so the cost of lumber or, all these different items, cars and other things are so expensive that perhaps that would slow down the spending. But even that didn't really put us into a recessionary period. We dodged that bullet with 8 or 9% inflation at that period of time. Yeah. So,
look, I think there's plenty of reasons to be concerned both about the wealth effect and what that could do to stock valuations, as well as a somewhat frothy market. And I'm not trying to do that myself. I think that is the description that many analysts are describing of this market right now, is pretty top heavy, pretty frothy. And if some sort of narrative changes the overall one, which, the narrative right now that to me is playing out in markets is AI is going to change everyone's life. And so get on the bandwagon. Right. That is the narrative that would, I think, need to change to kind of reverse where the market is going over the next few years.
And I was having a conversation with someone last night. It's just, I don't know when there would be a moment in time to question that sort of way of thought. The way of thought now is that, like you said, AI is going to allow for an increased enhancements of productivity and a lot of revenue growth. And I feel as if we're in the early innings to a point that the market is not going to be overly critical without revenue progress yet. I think that there's some time to go on that end of things, unless there's some abrupt event that comes unexpected. But the $100 billion of capital expenditures to building these data centers, that's going to take some time to work its way through the system, and it's going to be hard to have some event that would really thwart the confidence there just yet.
Yeah, I think the event that, well, there could be any number of them, but if it's about that, it's about funding drying up for all this development.
The event would be a huge technological advancement, like a DeepSeek that we had previously, that questions how much computing capacity do you need, or pricing. That's one.
Well, that or the willingness of these lenders to say, yeah, go ahead and spend like wildfire on getting this stuff up and running.
Right.
And that seems unlikely to me when it's Microsoft and Google and Amazon that are funding all of this.
Yeah.
But anything is possible on that front, and they're not funding every piece of it. So I think the narrative can change rapidly when you're talking about something as emerging as artificial intelligence, just like it did with the internet. And the longer you go without companies coming out and saying, here is the impact to our bottom line,
This is transformation.
Here is the clear increase in sales and therefore the increase in profit from this transformational emerging technology. The longer you go without that breakthrough story, the longer you go without that new startup that is like ChatGPT has, getting more users than has ever, than ever been gained on any tech platform in history. That's when investors start to call it into question, and we are, seemingly not even close to that today. Let's take a quick break here. When we come back, a lot more to cover on the tariffs and everything else, but we're going to be doing Wall Street Watch coming up next, and then I do want to get to this kind of hidden story on a company called First Brands. That's next after Wall Street Watch.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Sometimes we know it's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com. This month's free guide from Cushing & Dolan is called IRA and Life Insurance Planning, Estate Tax Strategies and Nursing Home Protection. Learn how naming your estate a beneficiary can reduce estate taxes, protect assets from nursing home costs, and avoid the 5-year Medicaid waiting period. Call 866-848-5699 to get your free guide today, or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. One of the biggest risks to retirement isn't just market volatility, it's longevity. People are living 25 to 30 years after they stop working, and that gives inflation plenty of time to work against you. At just 3% inflation, your expenses double in about 23 years. Add to that the fact that healthcare costs typically rise faster than general inflation, and your later years could be your most expensive. Without a plan, that combination can put real pressure on your savings. That's why we've put together a brand new guide called Inflation in Your Retirement Plan. The guide shows you ways to balance longevity risk with rising costs and strategies that may help you make your money last through decades of retirement. Call 800-393-4001 to get your free copy today. 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva with the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke, a partner with the law firm of Cushing & Dolan with a master's in taxation. And today we're talking about choosing beneficiaries for your IRA. Todd, what is the best way to deal with qualified retirement plan assets, and can they be transferred to these irrevocable Medicaid trusts?
So this is a tough asset in general. When you're dealing with retirement plan assets, it's difficult from an estate planning standpoint or a Medicaid planning standpoint to deal with them. Why? Because they have both an income tax component and an estate tax component, right? They're taxable when you take them out, and when you die, they're subject to your estate tax. So the general way to do this would be, one, you can name the spouse as the beneficiary of the IRA, or you can name the kids the beneficiary of the IRA, or sometimes you can name the trust the beneficiary or the estate the beneficiary. But it all depends on the size of your estate, the size of the IRA. But the one thing you really can't do is you can't take the asset and transfer it to the irrevocable trust or revocable trust while you're living. Otherwise, it will create a income taxable event. So tough to plan for those in advance unless you name the estate the beneficiary.
Educate yourself about the estate planning process. Request your free copy of Todd's brand new guide called Why Name Your Estate an IRA Beneficiary right now by calling 866-848-5699. That's 848-5699, or you can request a copy from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets are mostly positive to begin the week, with the AI sector rebounding after seeing recent pressure. Traders also keeping an eye on the potential government shutdown, and we have a significant September jobs report due out later this week on Friday morning. Right now, the Dow is dipping into negative territory, mostly flat. S&P 500 is up nearly 0.5% or 30 points higher. NASDAQ up nearly 0.9% or 193 points higher. Russell 2000 is up 0.1%. 10-year Treasury yield down 4 basis points and now is at 4.146%. And crude oil down 3% today, trading at $63.66 a barrel. We start today with some major news in the video game space, where Electronic Arts said it is going private for $55 billion, marking the largest private equity-backed buyout in history. The video game maker this morning said it agreed to be acquired by Public Investment Fund of Saudi Arabia, Silver Lake, and Affinity Partners. Shareholders of the company will receive $210 per share in cash. EA stock is jumping 5% on that news. Meanwhile, cruise operator Carnival reported quarterly results ahead of the open this morning, beating earnings and revenue expectations, driven by resilient cruise demand and strong advanced bookings for 2026, in line with record 2025 levels and at historical high prices. However, shares are down over 2% at the moment. Elsewhere, global drug maker AstraZeneca said it plans to list directly on the New York Stock Exchange in a push to broaden its investor base. Separately, on Friday, the company said it would offer discounted asthma and diabetes drugs in the U.S., as President Trump pressures pharmaceutical companies to cut drug prices. And cannabis stocks are seeing gains today after Trump touted the benefits of CBD for seniors. Advisor shares Pure U.S. Cannabis ETF is jumping by 21%. Aurora Cannabis is up by 24%, and Tilray shares are surging 40%. I'm Tucker Silva, and that is Wall Street Watch.
All right, what we're going to cover now is a story of a company that I had not heard of until this weekend. I don't think most people have heard of them, a Midwest auto parts supplier called First Brands. That company today intersected with another story that we've been talking about, which is private credit markets. I do think we've been giving these two stories a fair bit of attention recently. One is the auto market and some struggles that we're seeing there. Two is the private credit market and where that's gotten to. I want to start off with the private credit market just to explain what that is and why that's a big deal today. And to do that, I'm going back 20 years to 2005. In 2005, there was about a $900 billion industry for U.S. below investment grade debt. So that was, prior to the Great Recession. That's the market for, below investment grade, meaning, it's not your Walmarts and your Berkshire Hathaway borrowing, it's your smaller companies. And that was dominated by high yield and leveraged loans. A lot of the banks owned this stuff. And then when it blew up, that stuff was also looked at pretty critically, and the banks especially were looked at critically and said, we don't want you holding this type of stuff. To that end, this is more complex than I'm making it, but that type of debt issuance didn't stop It just moved from one place to another because basically regulators said it can't happen at the bank, so we need this to go elsewhere. Today, the total estimate for below investment grade debt is about $3.8 trillion. Again, compared to $900 billion back before the Great Recession. More than a quarter of that is made up in private credit. So again, high yield and leverage loans still exists, but back then they were making up 90% of this. 92% of it. Today, those two categories are making up 70-ish% of the total. So private credit has grown tremendously and is one of the fastest growing areas of debt issuance out there. And, dominated by some companies that you might not have heard of, right? Apollo Global Management, Blackstone, Ares, KKR. These are not exactly household names in the same way that JP Morgan, Chase, and Goldman Sachs are.
Right.
In any case, it has ballooned tremendously. Going to conferences in the financial services industry, I can tell you that it is, other than artificial intelligence, probably the most talked about thing is private credit and who's playing what and what the opportunities look like, and sometimes, some of the concerns about the landscape. But it's very opaque. These companies go and issue debt that's not available on public markets. It doesn't trade. It's held by a lot of big institutions like insurance companies and pension funds. And it's just not something that you get to read on because it doesn't trade every day like you would a publicly traded bond. What happened over the weekend was this little-known car parts supplier out of the Midwest making like windshield wipers or and things like that declared bankruptcy. And Financial Times, by the way, has done the best reporting on this if you're looking to check out some of the stories yourself. They declared bankruptcy, and it was quickly... This is a private company, by the way, not publicly traded. And it was quickly discovered that they had a lot more debt than anybody was really aware of.
Right.
So estimates that I've seen so far put their total liabilities somewhere in the 10 to 50 billion range. This is a company whose assets are estimated between $1 and $10 billion. Now, they do this with all sorts of kind of weird mechanisms to, put this off their balance sheet, make their balance sheet look more attractive. It's kind of like IOU stuff. Hey, we're going to get this piece from a parts supplier over in China, and we've got a contract to pay that parts supplier over the course of a couple of years. It's more of an IOU, but it is a debt. It just didn't end up on their balance sheet in some cases. But here is what I suspect is happening all of a sudden at all of these debt issuers, who, by the way, we don't even know, who necessarily has the biggest ownership of this debt. I would suspect that if I were one of them, I would be calling out to all of my, issuers, all my loan underwriters, and to all of my analysts of these companies saying, is this unique to First Brands? Was there something fraudulent going on here where they weren't properly disclosing? Or is this, is this a canary in the coal mine of the type of companies that we are lending to right now? Because First Brand's situation was unique, right? I mean, it's operating in the auto industry, which has been under a lot of pressure recently. Tricolor, this other company, went bankrupt a couple weeks ago because the auto industry, because of tariffs, because of a weak consumer that, contributes a lot to this sector, right? We talk about irresponsible car buying solutions and people borrowing a lot of money to do so. Like, not surprising that the auto industry is under pressure. So this is particularly unique. But what if what's not unique is a bunch of really small companies borrowing a crap ton of money and nobody knowing about how much is on their balance sheets?
Right, exactly. I mean, some of these measures that are used with these private credit financing make your head spin in terms of how intricate and how are some of these allowable. Like, there's one particular technique out there that's called payment in kind financing, where basically, think about if you had a credit card balance out there and then they came to, you got 10 grand on credit card debt and the interest payment comes through. And I say, Mike, all right, it's time to pony up. You owe me 20% on your 10 grand interest. You're going to say, you know what, Paul, I'm going to use payment in kind financing. What I'm going to do is that interest, just tack it on to the balance. That 10 grand is going to jump to that, whatever that monthly payment was of that 22% or 20%. That could balloon your debt over a course of a year from 10 grand to 12 grand just because you effectively gave me an IOU. You know that interest, Paul, you were looking for from me? We're going to just roll it into the balance. And there's similar
Put it on the
types
tab.
Put it on the tab. There's similar types of practices here in other means and inventory and things like that. And so that's what we're focused on. Not specific to these companies. It's alarming, but are there other instances out there? Because there has been so much fuel behind this private credit market, and typically Howard Marks, who is a specialist in this area, he is the co-chairman of Oak Tree Capital Management and has just been a high-yield investor, debt investor for years, very successful, said, it very simply, the worst loans are made in the best of times. It's been the best of times for the last 10 or 15 years for private credit, and usually you can tell by going to industry conferences what they're talking about the most usually has run up the most, and there's the most demand behind. And so that's why we cover this story so much, is because does this have broader implications? Does this have broader impact? I think to assure listeners a little bit, this is private credit market. So we're not talking about what were the Lehmans or what are today the Goldman Sachs and JP Morgan that have significant exposure to this, but that subprime auto lending that dried up for a lot of big banks out there has shifted to other parts of the market. That's what we're talking about here. The person who has a credit score under 620 who needs a loan from a lending perspective for a car, they're not getting it from the major financial institutions out there. They're looking elsewhere for those types of loans in some instances.
Let's take a quick break. I do want to get back into the implications of all this. Yes, small, unknown Midwest car parts manufacturer going belly up probably doesn't matter much for you. But if this is some form of contagion, if there's other stuff, what to worry about, what not to worry about when it comes to private credit and the economy generally. That's next on the Financial Exchange.
The Financial Exchange is now available on your Alexa smart speaker. Ask to play the Financial Exchange and catch up on anything you might have missed. This is the Financial Exchange Radio Network. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, adjutant of the Disabled American Veterans Department of Massachusetts. We pride ourselves on being able to support veterans in their time of greatest need, ensuring they receive the protections they deserve. For over 100 years, the DAV of Massachusetts has helped thousands of veterans with housing, transportation, and medical assistance, and you can help too. Please visit dav5k.boston and make a donation today. That's dav5k.boston.
This fall, why just watch the leaves change when you could watch the sunset over turquoise waters? The U.S. Virgin Islands are your perfect fall escape. Set sail on the sparkling blue sea, snorkel colorful reefs, kayak through calm lagoons, or try to reel in the big one with world-class sport fishing. Then, explore Charlotte-Amalie, the capital of St. Thomas, with its historic streets and duty-free shopping. Ferry to St. John's Virgin Islands National Park for hiking and secluded beaches. And finally, experience the culture, festivals, and rum of St. Croix. 3 incredible islands, countless experiences, and something for everyone to enjoy. With easy travel from New England, no passport required for U.S. citizens, and no money to exchange, paradise is closer than you think. So why wait? This can be the season you fall naturally in rhythm with the heartbeat of the islands in America's Caribbean, the U.S. Virgin Islands. Plan your getaway now at visitusvi.com. That's visitusvi.com.
Are you wondering where the economy is headed? GDP is growing, but tariffs, inflation, and job numbers are making headlines. Interest rates, housing costs, and policy changes are impacting all of us. Even AI is changing how markets move. Hi, this is Chuck Zada from the Armstrong Advisory Group. We're hosting 2 financial seminars this fall to help you make sense of it all. Join us at Margaritaville Resort Cape Cod on October 9th or at the Showcase Superlux in Chestnut Hill on October 16th. To reserve your seat, call 800-393-4001. We'll break down on the economic trends, market risks, and smart strategies you need to plan for retirement and beyond. Diversification, preparation, and smart decisions are several of the keys to navigating uncertainty. Register today by calling 800-393-4001 or on our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
If you're just joining us, we've been talking about the bankruptcy of this little-known auto parts supplier, First Brands, out of the Midwest, and the potential implications that they might have for the broader economy. If you missed the last segment, go check out some information on the Financial Times. Check out the podcasted version of this show wherever you listen to podcasts. But First Brands, which is this relatively unknown company, relatively small, privately held, declared bankruptcy, and all of a sudden, everyone's figuring out just how much debt they were carrying, and nobody was seemingly aware of it. A $1 to $10 billion company in assets, $10 to $50 billion in total debt out there. And here's where it comes to. I do not believe, even in the event of a private credit scenario, a blow up in that private credit space, that we have a worry about our most important financial institutions. Even if this gets way worse, this does not appear to be a problem for Bank of America or JP Morgan Chase. And I think that is one of the things you can point to as a success from the rules coming out of the great financial crisis is these very important institutions that are out there seem like they are not at all exposed to all of this. And a lot of retail investors are not terribly exposed to this space either. So I take that as a win, that if this stuff gets worse, I don't think that we have much of an issue there. In terms of where this stuff is exposed to, so private credit generally, right? If you take this story to be a canary in the coal mine for the private credit space, which I got to be clear, I don't know that it is. This could be just a blow up in the auto industry, and maybe it just stays confined to other areas that are specifically exposed to tariffs and a weakening consumer on the lower spectrum of the credit worthiness, right? Because that's what we've seen so far. Is
sure.
A lender called Tricolor go bankrupt mainly because of subprime borrowers and, in many cases, undocumented immigrants borrowing from that company. And then this one case where we have an auto parts supplier going belly up.
Shades of Silicon Valley Bank and First Republic back in 2022 was where we mentioned, hey, perhaps this could be wire spread or it could be contained to a couple companies, and that's how we moved on from there.
If instead what this is a come to Jesus moment for a bunch of private lenders out there to say, hey, this is interesting. This First Brands company, we lent money to them. We didn't really realize how many other people were involved in lending money to them, and we certainly didn't know these other credit arrangements they had with all of their parts suppliers. Let's go look at our book and comb through it. If this is repeated everywhere and suddenly private credit dries up to even a small degree or pauses, right? Like, we're just, our investors want us to go comb through everything before we make any new loans. There are broad implications for the rest of the market and the economy. One, the holders of all these package loans, right? These companies go issue it and then they resell it. Who do they resell it to? Pension funds, insurance companies, other institutions, sometimes retail investors, but not often. So, big questions about where all this stuff is held if it goes bad. Second piece would be this stuff is funding a whole bunch of the growth in this economy right now.
That's important to point out that it's not all bad. There's a lot of positive examples that have come from the expansion of private credit for
it's a necessary thing that happened because the banks weren't doing it anymore.
Exactly. For small businesses and for areas of opportunity that have helped businesses grow. So it's important to paint that other side of the picture. Is just because the financing wasn't available from your behemoths out there doesn't mean that this didn't solve a problem, and in a lot of places has worked effectively.
But I'll ask, can you have a continued AI build-out boom without the participation of private credit if it's going through its own moment of crisis? Like, how could this go and affect me and my portfolio? Oh, well, that would be an area that it could. Again, this is all very early, and I think, again, it could be weeks or months before we have a real sense from these companies what happened here and what lessons were learned. But to me, I don't know, the way that space started panicking this morning and looking at things was a bit of a canary in the coal mine on two converging stories that we've been paying a lot of attention to. And I don't think that this is getting the coverage right now that it probably deserves for its significance.
Hey, this fall, why just watch the leaves change when you could watch the sun set over turquoise waters? Well, the U.S. Virgin Islands are your perfect fall escape. Set sail on the sparkling blue sea, snorkel colorful reefs, kayak through calm lagoons, or try to reel in the big one with world-class sport fishing. Then explore Charlotte Amalie, the capital of St. Thomas, with its historic streets and duty-free shopping. Ferry over to St. John's Virgin Islands National Park for hiking and secluded beaches. And finally, experience the culture, festivals, and rum of St. Croix. Three incredible islands, countless experiences, and something for everyone to enjoy. With easy travel from New England, no passport required for U.S. citizens, and no money to exchange, paradise is closer than you think. So why wait? This can be the season you fall naturally in rhythm with the heartbeat of the islands in America's Caribbean, the U.S. Virgin Islands. Plan your getaway now at visitusvi.com. That's visitusvi.com.
The other story that has just been getting absolutely no play, and I get why, because we don't do any of this manufacturing in the United States, but Jaguar Land Rover Auto, which has plants for manufacturing the Range Rover in the UK, Slovakia, India, Brazil, they have been out of action, meaning not producing anything, since the beginning of the month. It's now September 29th, and this company has not been producing cars for a month. They just targeted restarting some of these things on Wednesday. All of this is the seeming result of a cyber attack that we are still getting some more details on. It's become so bad that the UK government just provided a loan guarantee of $1.5 billion. And then the company is also seeking to raise a further $2 billion from banks to shore up their finances during this shutdown. This is not the only problem that is plaguing this car maker. They're owned, by the way, by India's Tata Motors. But this is a huge part of the UK economy, a huge part of the UK auto industry. And a cyber attack has basically taken them down and caused their operations to fully stop now for about a month. Obviously, companies also facing big problems when it comes to tariffs imposed by the Trump administration and other pressures that they are looking at. But wow, the cyber attack taking down a company this large that has, by the way, nothing to do with technology, right? We always think about this in terms of, oh, what if Google goes down, or what if Facebook gets hit and they can't sell ads? Like, there's a car manufacturer that can't build cars.
Jaguar, I feel like, just has lost, doesn't have the same luster it did 10, 20 years ago.
No?
The Jaguar brand. Land Rover definitely does. But
quick break. A lot more to cover in the second hour of the Financial Exchange. We'll have a full market update and more for you. And Corey Adams from Robert Half join us to talk about the labor market. That's next on the Financial Exchange.
Are you over the age age of 50, want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense. Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM. Concord, Boston, the Money Matters Radio Network.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
This fall, why just watch the leaves change when you could watch the sunset over turquoise waters? The U.S. Virgin Islands are your perfect fall escape. Set sail on the sparkling blue sea, snorkel colorful reefs, kayak through calm lagoons, or try to reel in the big one with world-class sport fishing. Then, explore Charlotte Amalie, the capital of St. Thomas, with its historic streets and duty-free shopping. Ferry to St. John's Virgin Islands National Park for hiking and secluded beaches. And finally, experience the culture, festivals, and rum of St. Croix. 3 incredible islands, countless experiences, and something for everyone to enjoy. With easy travel from New England, no passport required for U.S. citizens, and no money to exchange, paradise is closer than you think. So why wait? This can be the season you fall naturally in rhythm with the heartbeat of the islands in America's Caribbean. The U.S. Virgin Islands. Plan your getaway now at visitusvi.com. That's visitusvi.com.
Mark Vonner is the CEO of Veterans Development Corporation. Mark is a career military man, having served for nearly 20 years, and we are so thrilled to have him and his company as a key partner and the presenting sponsor of the DAV 5K Boston. Mark comes from a proud military family, including his father Victor and his brother Timmy. Mark talks often about how serving his country was one of the greatest achievements of his life, and that's one of the key reasons that he chooses to give back to this special community. Mark is honored to continue his legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Mark, and it's why he's taken the time to fully support the DAV Department of Massachusetts. You can join Mark Vonner and Veterans Development Corporation and help our great American heroes today by making a donation or becoming a sponsor. Simply visit dav5k.boston. That's dav5k.boston.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we've got a guide available this month on the topic of inflation and your retirement plan. Mike, a lot of people listening might be familiar with the idea of the Consumer Price Index, the CPI, but rare is it that we find someone whose own personal rate of inflation exactly matches the CPI consistently.
Of course, we all have different spending habits. We all live in different parts of the country and have different effects of inflation. But I think a great example here, Chuck, is during a large portion of the 2010s decade, CPI was relatively in control and people got very little in the way of increases on their Social Security. However, healthcare inflation was pretty hot, and Medicare prices went up pretty dramatically during that period of time. And that is one area that dramatically affects retirees that doesn't play into CPI all that much and resulted in people seeing their Social Securities just not growing a whole lot during that 2010 decade. And so you really do have to evaluate the risk of, hey, here are my spending categories, and how might things like changes to the labor market or changes to energy markets, if I live here in the Northeast and I can't get natural gas and I'm instead relying on oil prices, how could those changes really affect my future finances?
Folks, our guide this month is titled Inflation in Your Retirement Plan, and the way to request it is by calling 800-393-4001. You can also request it online at armstrongadvisory.com. The guide again is Inflation in Your Retirement Plan, and that phone number to call is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts. Do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Paul Lane.
Good morning. Happy Monday. Welcome back to the Financial Exchange. We've got markets in mixed territory here, but largely to the positive. Dow is off by about 25 points, whereas the S&P and NASDAQ are up about 0.4% and 0.8% respectively. We have got a busy week from a labor market perspective. Tomorrow, we're going to be getting the JOLTS report, the Job Openings Labor Turnover Survey. And then the rest of the week, depending on whether or not the government shuts down at midnight on Tuesday, we may be getting some data on weekly jobless claims as well as the monthly jobs report that we get. Tucker, were you putting on your thinking face? Or it was a thinking face. I'm just not sure if it was relevant to this show.
I think it just dawned on me. So if the government were to shut down, we would not see a jobs report? Is that correct? Or
there would be nobody working there to release said jobs report. So even if it's fully prepared... Okay. It's a guess. Nobody knows.
Okay.
I suppose they could get the data to the head of the agency by Tuesday in case they shut down.
Right,
They probably have it all compiled at this point, but I would suspect that we would not get that report.
Okay.
If the government shut down. We have a few earnings reports that we'll be covering this week, including from Nike, whose stock is down nearly 50% over the last 5 years, and some data that we did get this morning on home sales. So pending home sales in August actually closed out the summer on a pretty happy note here. So home sales in August increased, these are pending home sales, so under agreement, by 4% from the prior month, 3.8% year over year, according to the National Association of Realtors. Wanted to take a look at this on a regional basis. So no surprise here, biggest uptick is coming from the South, where the inventory uptick has been the biggest. But nonetheless, you're still seeing this across the country except the Northeast. So month over month, pending home sales down 1.1% here in the Northeast, up 3.1% in the South, 8.7% in the Midwest, so something interesting going on there, and then up 5% in the western region of the country as well. So I'll take this, I guess, as good news for the housing market. I still think that with mortgage rates at this level, we will have kind of a mixed bag of a housing market this spring, but I think, should we get under that 6% range, that would be a very desirable housing market to see next spring. Again, for most parts of the country, other than the Northeast. Last piece that we'll be going back to probably all week this week is a very lesser-known car parts supplier. First Brands is filing for bankruptcy. And the story among financial outlets and analysts is this could be some sort of canary in the coal mine. Not so much for the auto industry, which is clearly under struggles, but for the private credit industry. And so more to cover on that, and you'll be hearing us, kind of talk about it throughout the week on the program would be my guess. Walmart CEO issuing a wake-up call to who exactly this is targeted to is an interesting question, but about artificial intelligence and its likelihood of changing every single job out there. So, Paul, let's talk about first what he said before we get into why he seems to be saying it.
Yeah, what he was talking about is this idea that it's going to change every single job in some way, shape, or form. He said, and I quote, "Maybe there is a job in the world that AI won't change, but I haven't thought of it." This was at a conference at Walmart's Bentonville headquarters with its own workforce and executives from other companies. I think to unpack that there, in the near term, there is going to be small, modest changes to the labor market. And this idea of widespread change, I feel, is going to take longer than a lot of people anticipate. And even some of the executive here do lean into this idea that it could take a while longer. What are some of the low-hanging fruit that you could see changes? I am more and more convinced that customer service jobs on those 800 numbers, that position is going to be dramatically changed by the use of AI agents instead of having the typical customer service center reps out there sooner rather than later.
So let's talk about that before we can get back to Walmart, but in that space specifically, you're not seeing a huge adoption yet of AI agents that are actually answering phone calls, but yeah, they are permeating online. They are using more of those when you're asking for a chatbot to ask questions to. One area, though, for call centers themselves that this is getting used in, at least I heard of several companies, especially in the Philippines, where a lot of U.S. support calls get routed to. if you worked in that space previously, effectively, all of your calls were monitored, and you would regularly have a review with your manager about, what went well, what went wrong. They would listen in on a few of the calls, and, probably on a pretty regular basis, this is how you could have improved that outcome. This is how you could have left the customer more satisfied. This is the tone of voice that you should have used.
I've done them before. That's how I started.
So the way that that's being done now is a little bit different. Every call is being monitored by artificial intelligence. Immediately, that AI is providing you feedback on how the call went, every single call, and is grading you. And is saying, okay, this is our best call support. This is the right tone of voice, the bad tone of voice. In some cases, it is live changing the sound of the person's voice on the call so that they sound like they have less of an accent than they actually do. And from what I've heard from some people that were willing to be interviewed for this piece that I can't remember if I read it or listened to it, but it was basically has turned the job into what was already a difficult job because you're working nights into a nightmare scenario because you are getting feedback from a computer on every single call that you answer. In addition to, the only time you ever call a customer service place is when you are
upset about something.
So
you don't call them and say they're doing a great job.
You're trying to solve a problem, and sometimes those people are pretty upset about the problem. And so it has made that specific work very difficult because of the constant feedback loop that you're getting from a non-human now. But I found that really, really interesting that that's how it's being used already in some of these call centers. Back to Walmart for a moment here. I think he's saying this for a few reasons. One, if there's one company you can look at to say they should probably have a lot of employees that aren't affected by artificial intelligence, it's Walmart, right? Like you think about how many people they employ in
2.1 million.
They employ 2.1 million. How many of those their job involves physical labor, checking people out at a grocery store, stocking the shelves, driving the product across the country. You would think that this is a company that's not heavily affected by artificial intelligence. I think that's the entire reason he's saying this. His job is to try and get excitement about his company's stock. So if he comes out and says every job at Walmart is going to be affected by AI, that's going to make a splash. By the very nature of his company, I think he's got an incentive to convince people that it is affected by artificial intelligence. And yeah, he's probably right. But I'll tell you, I think it's going to be a long ways before a truck driver has their job dramatically shifted by artificial intelligence.
Long ways away, but I don't think it's wrong to bring it up. And I think you're understating how important it is for their business. I mean, they're competing with the likes of Amazon, who we gloss about how they do such a tremendous job with technology, or they are put in these stories very frequently in terms of how much they use robots in their warehouse and things like that. This is their main competitor.
Yes.
And I think what would surprise people is that Walmart has always invested very heavily in technology. Now, they were behind on some of the last mile delivery stuff that Amazon crushed them on, but they're catching up quickly. And so I do think that it's important to the business. I will agree with you that the idea that some of these physical jobs are going to change overnight, that's probably not the case. But an interesting story nonetheless.
And a follow-on piece, some Boston companies talking about workers. This is, I think, the message that CEOs, especially CEOs that are actually able to invest in their homegrown artificial intelligence, that's increasingly how it's being done, is because companies don't want their IP, their intellectual property, ending up on one of these systems. They're basically hiring companies to come in and build a generative AI system for in-house and basically teaching it to learn on proprietary data. The message from DraftKings under a new policy is that you cannot hire anyone next year unless you've already proven that AI can't do the same job. And we're thinking of customer service jobs. That's not all that they're talking about here. It's coding.
Right.
It is financial analysis. It is all sorts of different things that different AI agents that are trained on different things can learn to do hypothetically. And that, I think, is more the message that you are going to be seeing delivered from CEOs, is not dream up this new business model, but rather prove to me that this job cannot be supplemented or done by an artificial intelligence agent rather than by your new $70,000 head.
What's a challenging ripple effect from that is you think about many of us who started in their specific industries often would take these types of jobs. Like I started working customer service in a call center as my first job out of college. And the ability to do those types of jobs that would be entry level, they're at least going to shift in what they look like before you are to be hired. And was I hired with the goal of doing that for the rest of my career? No, but it was a great place to start to learn. And so you wonder, for those college graduates who've already seen a slower job market for those folks, how that changes that market there for graduates.
Let's take a quick break. When we come back, Corey Adams from Robert Half, speaking of the job market, joining us to talk about the 2026 salary guide that Robert Half has put together. That's next on the Financial Exchange.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon, where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
Mark Vonner is the CEO of Veterans Development Corporation. His dedication to serving our veterans has made an incredible impact on his family and employees. And he is so proud to be the presenting sponsor of the DAV 5K Boston.
My name is Ashley Vonner, Director of Operations at Veterans Development Corporation. I wanted to learn the family business under the guidance of my father, Mark Vonner. VDC is more than a general contractor. It's a service-disabled, veteran-owned small business that goes above and beyond for the veteran community. With Mark's military background, serving in the Marine Corps, our company is committed to supporting the Disabled American Veterans Department of Massachusetts. VDC has been the presenting sponsor for the DAV 5K for many years, striving to spread awareness of this great organization. Working for Veterans Development Corporation has shaped me into the person I am today, and I am proud to be a part of this organization.
Please visit dav5k.boston to show your support today.
This fall, why just watch the leaves change when you could watch the sunset over turquoise waters? The U.S. Virgin Islands are your perfect fall escape. Set sail on the sparkling blue sea, snorkel colorful reefs, kayak through calm lagoons, or try to reel in the big one with world-class sport fishing. Then, explore Charlotte-Amalie, the capital of St. Thomas, with its historic streets and duty-free shopping. Ferry to St. John's Virgin Islands National Park for hiking and secluded beaches. And finally, experience the culture, festivals, and rum of St. Croix. 3 incredible islands, countless experiences, and something for everyone to enjoy. With easy travel from New England, no passport required for U.S. citizens, and no money to exchange, paradise is closer than you think. So why wait? This can be the season you fall naturally in rhythm with the heartbeat of the islands in America's Caribbean. The U.S. Virgin Islands. Plan your getaway now at visitusvi.com. That's visitusvi.com.
Are you wondering where the economy is headed? GDP is growing, but tariffs, inflation, and job numbers are making headlines. Interest rates, housing costs, and policy changes are impacting all of us. Even AI is changing how markets move. Hi, this is Chuck Zada from the Armstrong Advisory Group. We're hosting 2 financial seminars this fall to help you make sense of it all. Join us at Margaritaville Resort, Cape Cod on October 9th or at the Showcase Superlux in Chestnut Hill on October 16th. To reserve your seat, call 800-393-4001. We'll break down the economic trends, market risks, and smart strategies you need to plan for retirement and beyond. Diversification, preparation, and smart decisions are several of the keys to navigating uncertainty. Register today by calling 800-393-4001 or on our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
The Financial Exchange is live on SiriusXM's Business Radio Channel 132, weekdays from 11 to noon. Get the latest business and financial news from across the country and around the world, and keep up to date on how it might affect your wallet. That's The Financial Exchange, weekdays from 11 to noon on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
Joining us now is Corey Adams from Robert Half for their 2026 salary guide, an important one to mention because this is actually the 75th annual salary guide that Robert Half has been putting this together for. Corey, thanks so much for joining us. Appreciate it.
Thank you. Always great to be with you.
So as you celebrate 75 of these things, what do you think are the biggest takeaways that you have from the 2026 salary guide that you put together?
Sure. So you referenced 75 years, and this guide has been a trusted source for salary benchmarks and workplace trends. And the three trends that are jumping out for us for 2026, the first one, we've been saying this for a while, but employers are willing to pay more for hard-to-find skill sets. They have been, and they will continue to do so. The second trend is that workers are negotiating for way more than just salary. And then the third trend is that total compensation is becoming a deciding factor, with many professionals willing to trade flexibility for stronger overall packages.
Okay, so important and obvious caveat or jumping off point. A few years ago, I would have told you that hard to find skill is something like coding. And that's where a number of students have been investing their time and effort. And all of a sudden, it seems like that is not quite the desired skill set. So what are employers willing to pay more for when it comes to hard to find skills?
So the guide itself references what we're calling bright spots. And so I'll give you three, and these are the three that are seeing, these are the roles that are seeing the greatest above average gains. So first, no surprise, artificial intelligence and machine learning, that had the greatest growth, that 4.1% increase. The second, and I feel like this is on the list every year, strictly as a byproduct of supply and demand, but public accounting, tax, audit, assurance, that was at 3.7%. And then the last one was content strategy, digital project management, and marketing analytics at 3.3%. Those are the big three.
I know internally, it's insurance renewal time, and I know internally at our own company, our health insurance costs, I think, ballooned some nearly 13% this year. What are employers trying to do to stand out to their employees when it comes to offering perks and additional stuff other than just the compensation? And how should employees try and evaluate that stuff that can oftentimes be, I guess, put to the side compared to, say, the headline compensation and bonus?
Yeah, it's a great question, and there's some really interesting data on this. So again, looking at that third trend, total compensation right now is truly a key differentiator. So workers are looking well beyond the paychecks. They're looking at perks and benefits that support their overall wellness and growth. So really important here, more than 53% of workers would switch jobs for a stronger financial package, which includes bonuses and stock options. The good news here is that half of hiring managers who filled out our survey actually plan to add new benefits and perks to stay competitive. So some of those popular offerings include student loan repayment assistance, wellness stipends, as well as paid time off for volunteering. And that's becoming really popular and really prevalent right now. Some of the non-monetary perks, like flexible work arrangements and childcare, are increasingly valued. So the big bottom line here and reminder is that employers who tailor their benefits to the needs of their employees are actually signaling a long-term commitment to retention within their organization.
The biggest area that I continue to see slack and where employees seem to be having a really tough time finding work is those new entry-level folks, especially those with college degrees right now. We are seeing a reasonably significant uptick in the unemployment rate there, and I hear more and more about it. If folks are looking to find that new job in 2026, what are the tips that Robert Half has for that demographic?
So I'll give you four, and some of these I know we've talked about in the past, but I think they're important, and I think the last one's probably the biggest one, particularly with this topic around salary. But the first one is you really want to leverage your specialized skills for premium pay. Many employers, in fact, 84%, are actively offering higher salaries to candidates with in-demand expertise. So I encourage you to please focus on building skills that are hard to find and highly valued within your field. Next, you want to invest in skill development. Upskilling is one of the most effective ways to boost your earning potential. So consider certifications or additional learnings in areas like AI, data analytics, or industry-specific tools that align with your current hiring trends. The third one, again, this is part of the third trend, was that you want to weigh your total compensation. So salary truly is just one part of the package. So look for roles offering strong financial incentives like bonuses, stock options, and then obviously everyone would certainly appreciate a student loan repayment assistance program. And then finally, again, this is the big one here, but know your worth and be ready to negotiate. Research the market rate for your position in your area using a tool like the salary guide and find out what a typical salary range is for a similar role. I can't emphasize this enough, but being informed truly does help you advocate for yourself effectively.
Corey, thanks so much. Appreciate it.
Thanks, Mike. Talk to you soon.
That's Corey Adams from Robert Half joining us today for the 2026 Salary Guide. You can check that out. They apparently have been putting it together for 75 years.
All right, we'll do trivia quick before we hit the break here. On this day in 2008, the Dow fell 777 points, its then largest single-day point loss. The dramatic loss followed the bankruptcy of two of the nation's largest banks. So our trivia question today, name one of the two major banks that filed for bankruptcy just before the September 2008 market crash. Once again, name one of the two major banks that filed for bankruptcy just before the September 2008 market crash. Be the seventh person today to text us at 617-362-1385 with the correct answer. You win a Financial Exchange Show t-shirt. Once again, the seventh correct response to text us to the number 617-362-1385 will win that t-shirt. See complete contest rules at financialexchangeshow.com.
Taking a look around at markets here, we've got two of the three major indices in positive territory, one of them being led by giant AI company Nvidia. Dow still slightly in negative territory, but we're going to have a full market recap for you just coming up. We got to take a quick break here, but we'll be back with Wall Street Watch after this.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. One of the biggest risks to retirement isn't just market volatility, it's longevity. People are living 25 to 30 years after they stop working, and that gives inflation plenty of time to work against you. At just 3% inflation, your expenses double in about 23 years. Add to that the fact that healthcare costs typically rise faster than general inflation, and your later years could be your most expensive. Without a plan, that combination can put real pressure on your savings. That's why we've put together a brand new guide called Inflation in Your Retirement Plan. The guide shows you ways to balance longevity risk with rising costs and strategies that may help you make your money last through decades of retirement. Call 800-393-4001 to get your free copy today. 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. This fall, why just watch the leaves change when you could watch the sunset over turquoise waters? The U.S. Virgin Islands are your perfect fall escape. Set sail on the sparkling blue sea, snorkel colorful reefs, kayak through calm lagoons, or try to reel in the big one with world-class sport fishing. Then, explore Charlotte-Amalie, the capital of St. Thomas, with its historic streets and duty-free shopping. Ferry to St. John's Virgin Islands National Park for hiking and secluded beaches. And finally, experience the culture, festivals, and rum of St. Croix. 3 incredible islands, countless experiences, and something for everyone to enjoy. With easy travel from New England, no passport required for U.S. citizens, and no money to exchange, paradise is closer than you think. So why wait? This can be the season you fall naturally in rhythm with the heartbeat of the islands in America's Caribbean. The U.S. Virgin Islands. Plan your getaway now at visitusvi.com. That's visitusvi.com.
Mark Vonner is the CEO of Veterans Development Corporation. Mark is a career military man, having served nearly 20 years, and we are so proud to have him and his business as a key partner and a presenting sponsor of the DAV 5K Boston. The DAV Department of Massachusetts does incredible work, and it's one of the first organizations that Mark became familiar with after his military service ended back in 1984. As Mark built his company, he knew he'd be giving back to fellow veterans who needed jobs, support services, medical supplies, and so much more. Mark works with disabled veterans every day, and it's one of the key reasons why he's such a big supporter of Dan Stack, the DAV Department of Massachusetts, and the DAV 5K Boston. You can join Mark Vonner and his team and make a donation to the DAV Department of Massachusetts or become a sponsor of the DAV 5K Boston. Simply visit dav5k.boston. That's dav5k.boston.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke, a partner with the law firm of Cushing & Dolan with a master's in taxation. And today we're talking about choosing beneficiaries for your IRA. Todd, what is the best way to set up designated beneficiaries for qualified plan assets from both a Medicaid and estate tax planning perspective for a married couple?
Generally, for a married couple, you have several choices. The most commonly used one is you're going to make the surviving spouse the designated beneficiary. It doesn't shelter assets from estate taxes. It just passes to the surviving spouse. It avoids probate, and it's probably the best way to go from an income tax perspective, not necessarily an estate tax perspective. Another way would be you could technically name the trust the beneficiary of the IRA when you pass. That at least will help it shelter assets for estate tax purposes and still provide for the surviving spouse. But from a Medicaid perspective, it will then protect it from the nursing home, but it'll take 5 years. Perhaps the newest and best way to do this would be to name the estate the beneficiary, provided you are over age 73 or over. That way, it goes through probate into the will. It is sheltered for estate taxes. It is immediately protected from the cost of long-term care for the surviving spouse, and the surviving spouse has access to it as well.
Educate yourself about the estate planning process. Request your free copy of Todd's brand new guide, Why Name Your Estate an IRA Beneficiary, right now by calling 866-848-5699. That's 866-848-5699. Or you can request a copy from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
A new week is upon us, and markets are currently mixed, with the AI sector seeing a rebound after recent pressure. Traders are also eyeing a potential government shutdown. And we have a September jobs report due out on Friday morning, but who knows if we'll even see that this week with that government shutdown. Right now, the Dow is down by nearly 0.2%, or 79 points lower. S&P 500 is up 0.2%, or 14 points higher. NASDAQ up about 0.5%, or 110 points higher. Russell 2000 dipping into negative territory, but mostly flat. 10-year Treasury yield down 4 basis points at 4.139%, and crude oil down over 3.5% lower right now, trading at $63.36 a barrel. Some major news in the video game space this morning, where Electronic Arts said it is going private for $55 billion, marking the largest private equity-backed buyout in history. The video game maker this morning said it agreed to be acquired by Public Investment Fund of Saudi Arabia, Silver Lake, and Affinity Partners. Shareholders of the company will receive $210 per share in cash. EA stock is up by 5%. Meanwhile, cruise operator Carnival reported quarterly results this morning, beating earnings and revenue expectations, driven by resilient cruise demand and strong advanced bookings for 2026. However, shares are down nearly 5% right now. Elsewhere, global drug maker AstraZeneca said it plans to list directly on the New York Stock Exchange in a push to broaden its investor base. Separately, the company said it would offer discounted asthma and diabetes drugs in the U.S. as President Trump pressures pharmaceutical companies to cut drug prices. And cannabis stocks are seeing a pop today after Trump touted the benefits of CBD for seniors. Advisor shares Pure U.S. Cannabis ETF is jumping 19%. Aurora Cannabis up by 30%, and Tilray stock is surging over 40% higher. I'm Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked you the trivia question. Name one of the two major banks that filed for bankruptcy just before the September 2008 market crash. We were looking for either Washington Mutual or Lehman Brothers. Mike from Bradenton, Florida is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Mike. We play trivia every day here in the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Paul, it is 11:36, and we have just barely talked about artificial intelligence and the stock market boom on it. So congratulations. I think this is the longest we've made it during a show for weeks, but we're going to go there now. Wall Street Journal has a piece. Debt is fueling the next wave of the AI boom. And Paul, you and I were talking about this a little bit off air. The AI boom started as a bunch of very cash flow positive and profitable companies, Microsoft, Google, Facebook, to name a few, investing a tremendous amount of money into the space.
Mm-hmm.
And that's what's been occurring over the last 3 years and continues today. These companies are continuing to pour a lot of money into it, and they can afford to do so.
Right.
What is relatively new, as the Journal points out, is the debt-fueled spending of some other companies that are also, big in the AI space that, look, if AI does not pan out to be as big of a deal as it's currently being bet on, then Microsoft is still going to have a very profitable business model. So will Facebook, so will Google. These other companies that are betting on it in different ways are not quite in the same position, and they are not using cash flow from existing operations to fund this thing. They're borrowing a tremendous amount of money to do so.
Exactly. I mean, the parallels to kind of the mid to late 90s build out of fiber optic cable networks.
Again, we made it to 11:36 before we made the comparison.
I got to mention it, and it's similar in a sense that you're building it before. It's the Field of Dreams sort of phrasing of, build it and they will come. And what ended up happening is building out the fiber optic cable build out they did come eventually, but they came later than anticipated. And for those companies that were integral as part of the build out, they struggled greatly. The WorldComs, the world. And if you make the same comparison here, the Oracles or others that are heavy in the CapEx expending on the infrastructure side of things. So think about data centers that are the size of 10 Home Depots in North Dakota. The amount of expense that is required to continue to run those data centers, if demand weakens for any reason because adoption is not as strong as people initially thought, you're left holding a really big bag for a huge data center that is 10 Home Depots big. To keep the lights on for that is really expensive if you don't have the demand to match it with. So that is a point that's being mentioned again and again, is that when you get heavily indebted for things that the demand isn't there for yet, I believe it's just 3% of people consumers are actually paying for artificial intelligence, whether it be chatbot or other services out there. There's a long way to go.
I wonder if that includes through their employer. But that's a wild statistic. Now, again, not necessarily a bad thing. Facebook, nobody's ever paid for, and they make a tremendous amount of money off of all of us. So,
but they did it on the backs of cheaper internet infrastructure.
Yep.
Yeah.
Yep. Folks, want to tell you about two events that we're hosting, but these types of conversations about where the market has been and where it may be headed based on this artificial intelligence trade is so fascinating to us at the Financial Exchange, and we'd love to share our thoughts with it. We'd love to have you come and join us at one of our two free events that we are hosting next month. The first one is at the Showcase Superlux in Chestnut Hill. Actually, sorry, that's the second one. October 16th at the Showcase Superlux. The first one is on October 9th at the Margaritaville Resort. So I'm going to say that again since I screwed it up. October 9th, Margaritaville Resort on Cape Cod. Showcase Superlux is the October 16th date. If you don't want to listen to me tell you about it, go to armstrongadvisory.com where we have all the details in plain written English so you can log in and register for your spot. But we're going to be doing a live broadcast of this show. After that, a lunch and a chat with the Armstrong Advisory Group. We're going to be talking specifically about where markets have been, what is really dominating the themes for markets, and you cannot talk about the stock market today without artificial intelligence. But inflation, housing costs, rising interest rates are all playing a role too, putting pressure on families everywhere, and we're starting to see some of the cracks in the foundation of some of those companies that support those folks. If you'd like to register, again, you can go to armstrongadvisory.com or you can call us at 800-393-4001. But make your reservation now, October 9th or October 16th. Chestnut Hill Showcase Superlux, Margaritaville Resort Cape Cod. Those are the two locations. Check it out again, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
We keep talking about the AI space and what could disrupt the narrative, and so far it's a lot been about, what if the narrative about AI just changes and people don't need it or feel like paying for it in the same way that they do other technologies. The other way would be China disrupting it in some way. We saw some of that earlier this year with DeepSeek. It was this new AI model that had been allegedly created on really kind of weak semiconductors. I think there's been some questioning about that now because ultimately Chinese companies can get a hold of Nvidia's best-in-class chips. They just can't get a ton of them. In either case, Huawei is doubling the output of their top artificial intelligence chips as the Nvidia offering in China continues to see lackluster demand. Mainly that's because the Chinese government is saying do not buy Nvidia's chips, but they are replacing that with a big tech leader that I don't think any of us truly know how far behind they are compared to Nvidia's latest and greatest semiconductors. And the big story when it comes to this and artificial intelligence is, can Chinese companies produce a still very impressive artificial intelligence product without the best chips? And it's not because they will ultimately create chips that compete with Nvidia, but maybe they don't need to. Maybe they can just produce so many of them powered by such immense electricity generation that, it doesn't matter if you're the most efficient anymore. What matters is your ability to compute a whole lot of stuff. And if you have to do that with 10 times as many semiconductors and 10 times as much power output, China's the country that I would bet on to be able to do that.
Yeah, we've seen that playbook before in terms of them flooding a market with cheap goods, or just creating so much excess inventory for different countries out there that they've been able to gain adoption. Just look at what they've done kind of with the EV market, specifically in Europe and Latin America. So it is something that is really significant to monitor in this race where we're pretty much in direct competition with China in terms of who can advance this technology the fastest and furthest. It's very clear from recent activity that Nvidia's position in China is almost all but gone going forward. It's completely diminished to that point where you said that they're really not going to be buying any of U.S. chips anytime soon.
Let's take a quick break. When we come back, Stack Roulette is next.
Hear the Financial Exchange every day from 11 to noon on SiriusXM's Business Radio Channel 132. Keep it here for the latest business and financial news and the trends on Wall Street. The Financial Exchange is now live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network. This fall, why just watch the leaves change when you could watch the sunset over turquoise waters? The U.S. Virgin Islands are your perfect fall escape. Set sail on the sparkling blue sea, snorkel colorful reefs, kayak through calm lagoons, or try to reel in the big one with world-class sport fishing. Then, explore Charlotte-Amalie, the capital of St. Thomas, with its historic streets and duty-free shopping. Ferry to St. John's Virgin Islands National Park for hiking and secluded beaches. And finally, experience the culture, festivals, and rum of St. Croix. 3 incredible islands, countless experiences, and something for everyone to enjoy. With easy travel from New England, no passport required for U.S. citizens, and no money to exchange, paradise is closer than you think. So why wait? This can be the season you fall naturally in rhythm with the heartbeat of the islands in America's Caribbean, the U.S. Virgin Islands. Plan your getaway now at visitusvi.com. That's visitusvi.com. This month's free guide from Cushing & Dolan is called IRA and Life Insurance Planning, Estate Tax Strategies and Nursing Home Protection. Learn how naming your estate a beneficiary can reduce estate taxes, protect assets from nursing home costs, and avoid the 5-year Medicaid waiting period. Call 866-848-5699 to get your free guide today, or request it online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Inflation, housing costs, and rising interest rates are putting pressure on families everywhere. From higher insurance and taxes to volatile markets, today's economic landscape is changing fast. This is Chuck Zada from the Armstrong Advisory Group. We're hosting 2 financial seminars this fall, first at Margaritaville Resort Cape Cod on October 9th, and next at the Showcase Superlux in Chestnut Hill on October 16th. Call 800-393-4001 to reserve your spot. We'll discuss how to manage risk, protect your retirement, and create a plan that can handle economic ups and downs. Whether it's core inflation, market volatility, or policy changes, you'll learn about strategies that may help you plan smarter. Register today by calling 800-393-4001 or on our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts. In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up
because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Subscribe to our page and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange brought to you by the U.S. Virgin Islands Department of Tourism. Looking for a getaway that's easy, warm, and unforgettable? Discover the magic of the U.S. Virgin Islands, St. Croix, St. Thomas, and St. John. Just a short flight from New England with no passport needed and no money to exchange. Soak up the sun, stroll along white sand beaches, and feel the rhythm of the heartbeat of the islands. The USVI is America's Caribbean paradise. Plan your fall escape now at visitusvi.com. That's visitusvi.com.
Paul, what do you have for us for Stack Roulette?
Mike, used electric vehicles are flying off the shelves, apparently. I did not know that there was a huge market for this, or maybe not a huge market, but they're seeing a ton of growth where used EVs sales through June had increased about 34% from a year earlier. Basically, what you've had is at the end of this year, I believe it was within the last month or so, you no longer get the $7,500 federal tax credit. Correct. And instead, rather than looking for the new vehicle purchases, there has been a lot more demand for buying used ones. The reason being that you can buy a used electric vehicle for close to the same price as a used gas combustion engine. There's some examples here where a retired realtor was able to buy a 2024 version of a Ford Mustang Mach-E GT at $33,000 when it only had 13,000 miles on it. It was a car that originally went for $55,000.
These car companies are so offsides on this.
Yeah.
They are so far overextended on this EV play.
Yep.
I just did my own search here, Paul. I was curious. I've looked at this before. But if I want a used Tesla in my area, I said it's got to be 2022 or younger and under 30,000 miles. No accidents. 26 grand. For a 3-year-old car that probably went for 50 when it was new.
Sure.
I mean,
easily, maybe more.
Yes, I can get a Volkswagen,
ID.
internal combustion engine for cheaper than that, but not way cheaper. So, yeah, the demand side of the equation for these EVs has just been way, way under what the auto manufacturers were planning on and investing based upon. And we talked about this from the very beginning. It was, how are you going to build out this massive new demand for electric vehicles when our electricity infrastructure just does not support it? Right? Like, it still doesn't to this day support the idea that all of us are going to be driving electric vehicles. And then, this is, by the way, not just a U.S. focused thing. Go look at Europe. The demand for EVs is way under estimates there as well, and they're all pivoting. The build out that you started getting from these American car makers, especially, and the investments that they were making, the partnerships with big battery companies, it all to me was putting the cart way before the horse.
Kind of like that AI story.
and it's just come, failing in spectacular fashion now, where they're all taking pretty big losses on these facilities that they built out and going back to what has always buttered their bread, which is the big
profit margins on trucks and SUVs.
Yeah. That's what people want to drive. Like, you weren't just going to create this market overnight. So some are more offsides than others. Don't get me wrong. Like, Ford had one big EV, so I'm guessing they're still fine. But there are big investments that were made here, and it's not that the demand doesn't exist, but it's not growing the way that they had been banking on, and certainly isn't growing the way that they were investing based upon.
Yeah, it's an interesting story where you can get these 2 or 3 year old vehicles for a pretty decent price that would be akin to an internal combustion engine that's 6 or 7 years old.
I'm waiting this one out. To me, again, I've brought this up before. Give me the EV with the built-in gas generator, and I will buy that thing all day.
Right.
Dodge is the first company, I think, to come out with this. They're going to have a new truck that has an internal combustion engine. No, sorry. It's got an electric vehicle engine and then just a generator that will recharge the battery on that electric vehicle that can run on gas. So if I am going on that long road trip and I can't find that charging station or I don't have time, then I have another option other than sitting at the charging station for an hour and recharging my car.
I'm immediately recalling a client event, a radio event we were at the weekend where the listener said to me, we don't know anything about cars. So
yes.
I'll refrain from making any more comments other than the EVs are cheap used.
Yeah, that's fair. Are you planning on moving in retirement? It doesn't always go as planned. This is from Barron's, and they've got a few tips on what to keep in mind when it comes to this. I think some of them people are aware of, like, look before you move. I can't tell you how many people I've seen move because they vacationed somewhere and then end up hating it once they actually live there. Study all the costs. Insurance costs in Florida have gone through the roof. Make sure you understand how much more expensive groceries and insurance is down there before you move there. Here's the one that I think people miscalculate and misunderstand frequently, which is the tax piece. So we are doing our show from Massachusetts. Paul, you have a lot of clients here, as do I. I hear frequently, hey, couldn't I save a lot of taxes by moving to New Hampshire or moving to Florida? And the answer is sometimes yes, sometimes no. It depends on your income. It depends on the makeup of your assets and all sorts of different complicating factors. But one thing that I always point to people that is really important, when you're talking about tax savings by moving from a state like Massachusetts or New York or Washington State or California, a lot of it is the estate tax when you die. And very frequently, what do we do when we are seniors and getting older? It's, yeah, I've been living in Florida for 20 years, but you know what? All my family is up in Massachusetts.
Mm-hmm.
And I need a little more help doing the things that I used to do every day.
Great hospitals.
And I've got really good health networks, and just all my family is there, and they want to spend more time around me, and I want to spend more time around them. I'm moving back. That's where all your cost savings is, right? You know, when you're talking about which state you die in as a resident of, that's when you're talking about the big tax savings. It's not so much the 5% income tax difference, because you'll make that up oftentimes elsewhere in real estate taxes and others. It's where you die that ends up mattering a lot in this calculation.
That's what frustrates me and doesn't get covered enough, is that just because there's no state income tax doesn't mean there's not tax revenue being generated elsewhere.
That is all the time we have for today's Financial Exchange. Markets closing in on the noon hour in mixed territory. We'll have a full recap for you, and jolts tomorrow, and a looming government shutdown tomorrow on the Financial Exchange.